Hi, this is EURUSD and today it's Monday, 12th of August 2013 and the time is 17:32 GMT. We are looking at the H4 time frame of the pair and we are using Ichimoku Kinko Hyo. You see the cloud, the Kumo. The upper border of the bullish Kumo is second span A, the lower border is second span B, and the opposite happens on the bearish Kumo. You see the red line, Tenkan-sen, you see the blue line, Kijun-sen, and you see the green line, Chiku-span, which imitates price action, but it is shifted in the past. If we turn the candlesticks into a line, you will see that these two lines are identical. Back to candlesticks. So we had an upward move of the pair, and we had this reversal, this bearish reversal, this corrective move a few trading days ago. I think it started on Thursday, I think so. Today it's Monday. I think it started on Thursday. We have only to count the candlesticks and we will find out the exact time when this started. Let's go to the daily chart of the pair and see the bigger picture. We see that the pair is on a bullish move. It's going above the Kumo, but below it there is a plateau, a flat top Kumo, which acts as a magnet for the price. You see that the main formation of the Kumo is horizontal here in this zone, and on the previous similar position of the pair, we see how the plateau attracted the price. The flat top Kumo attracted the price. It may not happen to this degree again. Everything is possible, but it's also extremely possible that it will happen again. So things look bullish, but the biases are bearish. We see Chiku-span going down here, but it will take some time to change the biases and to turn it to a clearly bearish picture. On the weekly chart, we see that the leading Kumo is horizontal, and we have this curved edge and this very small distance between Sekou-span A and Sekou-span B. We are about to have a cross, and if we have a cross, we are going to have a bearish reversal. So we have to wait for that. Things are bearish on the monthly chart, and we will see if the price is going to move inside this cave here, which is formed by Sekou-span A on the lower border of the Kumo, of this bearish Kumo, or if it will fall. It remains to be seen. We see that the price has been in a consolidation, in a range-bound consolidation triangle. Let me insert the lines to help you see it. And this means that we should expect a breakout quite soon. It may take a few months, 2 months, 3 months, but we should expect a breakout to one direction or the other. Now, let's remove the trend lines from here. And let's go back to the smaller time frames, daily, H4. So we should enter short. we should enter short. We missed this move, but it's not late because it looks like the move has a future here. If we insert a lagging indicator, which is PSAR, parabolic SAR, I have chosen the pink color for its dots, we will see that it has given us bearish dots on the H4 chart. We lost those candlesticks, but we are seeing the very first, let me move this from here so you can see it. We see the very first bearish reversal dot above today's candle on the daily chart. Let me take these things away so you can see it. Okay, so you see the first bearish reversal dot on the daily chart above today's candlestick. I apologize for my dogs. Let me stop this for a while. So it means that since PSAR is a lagging indicator, if it gives us a dot here on the daily chart, it means that this is the beginning of a downtrend, no matter how big it is, but it's going to last at least a few days. A few days means a lot of pips for you, a lot of pips for us, so we'd rather pay attention to this signal. Okay, I will remove PSAR now. I will go back to H4 and let me bring okay okay here is the stop loss. I'm placing it above the higher the swing high, the last swing high made by the price. The prices, it was going up, it was making higher highs and higher lows. The last higher high was this. We put our stop loss above that, and we will pick our entry, our exact entry point, going to smaller time frames, to the smallest possible, once all our criteria are met. Which are our criteria? We want all the time frames up to H4, all the smaller time frames, which are they? H1, M30, M15, M5, M1. We want all of them 100% bearish before we enter. If they are not, we stay out. So let's see, is H1 bearish? H1 is 100% bearish. Chiku span has turned downwards. The price is below the Kumo. The leading Kumo is bearish and its edge is sharp, pointing downwards. It is as sharp. I could cut my finger on it. Remember this. Remember this picture. I use it all the time because it's something that will create a visual image in your brain, in your mind, and this will help you with your trading. I like to create images in my mind because they help me a lot. So copy me on that. Sharp pointing edge, pointing downwards. Okay. So we have our criteria met on H1. M30. Definitely our criteria met. We had this bullish move, but now we have price going down, and we have Chiku span going down. It's going straight down below past price action, below the Kumo, of course, and the leading Kumo is bearish, and its edge is going, it's starting to be sharp. It's not as sharp as we'd like because of this move here, but it's okay. So let's go to M15. M15, we want the Chiku span to go below past price action, not above it. So we should wait for the price to go below the Kumo again, not inside the Kumo. It's worth waiting. Okay, so wait till you see it going below the Kumo. M5. We want to see a bearish Kumo breakout here, a successful bearish Kumo breakout. We want Chiku span going below the price, but preferably also below the Kumo. If not below the Kumo, at least we would like to see it below the price, and the price action below the Kumo, preferably making a successful bearish Kumo breakout. On M1 we have a bearish Kumo breakout. We see Chiku span going slightly up. We want it to go straight down. I would prefer to see a big candlestick, a big bearish candlestick here, and Chiku span going like a straight line going down, and then see something more bearish here on the M5 before I enter. It's at the region of 1.3305. It's where we have put our entry line here, but because this signal is live, and because the trade is live, and nothing is written on a stone, I want you to make sure all the entry criteria are met, because if they are not met, you shouldn't enter, you should stay out. Once you enter, picking the point from M1, you go to H4, you monitor your trade from there, you put your stop loss there, you trail your stop loss using the H1 time frame, and you trail it from here. You will trail it a few pips, 30-40 pips above the new lower high. The price, as it is falling, it's making lower lows and lower highs. It will make a lower low, a lower high, a lower low, and a lower high. When it will make a second lower low, you will trail your stop from here to the lower high, a few pips above the lower high, on the H1 time frame. Okay. Now, your take profit target. Since we are practically entering after a bearish Kumo breakout on the H1 time frame, we should expect to exit on a bullish Kumo breakout on the H1 time frame. Okay, the opposite of what happened here. Here, if we had entered with the bullish Kumo time frame here, let me insert a shape to help you see this. If we had entered here, we should have exited, insert shapes, we should have exited here. Okay, so that would be our profit zone from this trade. Okay, similarly, we enter with a bearish Kumo breakout on H1 time frame. We should exit after price goes down, 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 and then reverses and goes up and passes through the other edge, the other side of the Kumo, and we have a bullish Kumo breakout. So your profit zone will be like this, depending on how low the price will go. This is it. So thanks for watching, and happy pips.